Hello and welcome to Asking for a Trend. I'm Josh Lipton. A big day in finance. The Fed makes its rate cut decision. Plus, investors digest a slew of big tech earnings. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. The Federal Reserve delivering a rate cut, and markets like the commentary from Fed Chair Jerome Powell. The S&P 500 closing near all-time highs. We've got the takeaways from the trading day. Plus, a closer look at the energy demands of AI. The leader of GE Vernova, one of the companies in the middle of this data center buildout, joins for an update as that stock hits a new record. And key options trades to make heading into the new year. We've got a few plays to consider for your portfolio. Well, GE Vernova sits at the center of a massive global energy buildout. And Yahoo Finance's Julie Hyman caught up with CEO Scott Strazik about how he's steering the company through this next phase.
If you look in the U.S., over half of the electrons every day in the country are created with our equipment. So,
Wow.
I mean, our install base is a very material part of the system in totality. In the world, it's about a third if you exclude China. So I give that context to just say we're playing to all industries and supporting all long-term dynamics. Today in our backlog, only about 10% of the backlog is hyperscaler, AI-centric. We could see that growing to approximately a third over the next 3 years, but today it's 10% of our business. At the end of the day, there's a lot of other drivers with demand right now. It's also just the electrification of buildings. It's the reindustrialization of the U.S. A lot of industrial growth outside the U.S., ultimately the electrification of transportation. So there's a lot of drivers. AI is one of them, but it's one of many.
Okay, so that's helpful to understand the bigger spectrum. Within gas turbines, though,
Yes.
It's a higher concentration, right?
It's about a third.
Okay.
It's really about a third of our future business from here. This quarter, as an example, we've signed large contracts in Vietnam, in Mexico. So there's other, certainly international markets. Think about Saudi's been a very big market for us with gas the last few years. Taiwan, which in some ways AI-centric because it's powering TSMC growth that ultimately is related to the data centers. But if you really say just hyperscaler direct or nearly direct, it's about a third of our business in gas.
So even if you're looking beyond the hyperscalers to that bigger spectrum that you're talking about, you know, obviously you're well aware of the big debate around the spending that is going into compute right now, AI
Yes.
compute. So it can be a double-edged sword. It's great for your business,
Sure.
but there are concerns about overcapacity and cutting back. Are you concerned about that at all?
Well, I start with what we're seeing in our operations. And the reality is part of how we're expanding our margins as much as we are, and you know, we talked about with our investors yesterday, is 8.5% EBITDA margins this year, growing to 20% by 28. Part of that is the variable cost productivity we're driving with a lot of volume growth and limited, as an example, engineering growth. And that's because of the investments we're making in AI and the productivity we're seeing. So when I take a step back and think about a $130 trillion global economy and half of it's labor and services in one way, shape, or form, if AI impacts 10% productivity of that labor, that's a $6-7 trillion annual benefit. And I hear a lot of debates on hundreds of billions of dollars of investments. My point is just, I think it's early and see a lot of attractive returns with what we see inside Vernova and generally with all of our interactions with the hyperscalers. So I remain confident in the build. And frankly, we're probably capacitizing for a smaller demand than what many of us read about it could be.
I want to ask about the wind business as
Yes.
well, because this is the lagging part of the business that's not doing as well right now. Part of that is policy related, right?
Yes.
The Trump administration and President Trump himself is not a wind guy.
Yes.
I think it's fair to say. So is the focus in that business going to be mostly international? At some point, do you say, why do we stay in this business? Do you figure out a way to get out of it? How are you thinking about that?
Well, you control what you can control. And the reality is we have 57,000 wind turbines globally creating electricity today. That already gives us a real opportunity to invest into how we service those wind farms and to get the most performance out of them. As an example, we have 30 gigawatts of wind turbines in the US that are eligible for repowering by the end of the decade, where you kind of leave the tower, but you may put on longer blades, a bigger generator. That's very attractive because the wind farm already is there and you can just replace parts and get more output.
And you don't have to get approval for a new project, for example.
Exactly.
Okay.
The permitting is more straightforward. So you focus on what you can control. And those are examples of what we focus on today while running our business better. So what I talk to the teams about all the time is we're not going to play victim. We're not going to suck our thumbs. There's always going to be different administrations that may focus on different electricity sources in different ways. We need to use this period that you're right, our volume is softer, but do we run away from that, or do we use that softer period of time to build a better business? So as an example, we've implemented a lot more automation into how we make the blades. We've added a lot more robotics and inspections to drive a higher quality product at the end of the day. In this regard, it's easier to do that when our volume is lower than it would have been to do in a spiked period of time. So through every business model and cycle, you need to take it for what it is and make it better, and that's what we're trying to do.
And finally, I want to ask you a little bit about M&A. You guys just, your most recent Prolec,
yes,
a maker of transformers, so another bet on electricity, and you bought the 50% of that you didn't already own.
Yes.
How does that fit in, and then how are you thinking about M&A as you go into 2026?
Yeah, I mean, we're really excited about the Prolec acquisition. To your point, we know the team well because we already owned 50% of the JV. There's large factories in Louisiana and North Carolina and Wisconsin that we see real opportunities to invest into to create a lot more output for the North America market. It just became a dynamic where we were doing more and more complicated deals with customers like the hyperscalers that were becoming commingled between, as an example, our gas and nuclear equipment and the grid equipment, and having to contract the transformers in the US with a 50-50 partner was maybe clunky. This streamlines the customer experience and allows us to invest into the factories in a way that maybe our partner didn't want to, because we're that committed to this market and believe in it. So,
and for next year, do you see any areas where you could see more opportunities like that, or other places that you would want to add on?
We certainly have a lot of capital to put to work. So what we talked about with our investors yesterday is we'll generate $22 billion of free cash flow after investing $10 billion of CapEx and R&D from 25 to 28. And then after we return at least a third of that $22 billion to our shareholders, that's $16 billion to put to work. So we need to focus on returns, figure out where we want to allocate that capital, but generally speaking, it'll likely be in our core. We talk about vertical integration, doing things that make the job easier for our teams than necessarily adding another ball in the air for them to juggle right now, because our teams haven't experienced this much organic growth, most of them in their careers.
Right.
So I want to make sure as I use our owners' money, I'm doing it in a way that my teams feel like we're making it easier for them to win and not more complicated. And that's where things like Prolec make a lot of sense, because it streamlined the customer experience. It allowed us to just integrate products that are similar to ours fully into our operations. That makes the team's job easier, and I think the customer experience better. Where we can find more of those opportunities, we're going to do it. But we're also going to be patient. We're not going to be rushed. And when we find the right transactions, we'll jump.
Great. Scott, thank you so much for being here.
Julie, thanks for having me again.
I appreciate it.
Thank
you.
There's a new twist in the bidding war for Warner Brothers Discovery. Paramount Skydance sending a new letter arguing that its $30 per share offer is superior to Netflix's proposal. Paramount also says the cash portion of the Netflix offer is roughly $7 per share lower, signaling a more valuable path for investors. The competing bid looks different. Netflix is offering an $82.7 billion deal focused on WBD's streaming and studio assets, with a $5.8 billion breakup fee if the deal collapses. By contrast, remember, Paramount Skydance is pursuing the whole company, backing its offer with a $5 billion breakup fee and trying to position itself as the cleaner, more comprehensive transaction. And now a new political wrinkle, too. President Trump saying any deal involving Warner Brothers Discovery must include the sale of CNN, injecting more uncertainty into regulatory and negotiating dynamics. Shareholders now face two different visions for the future of WBD, with valuation, structure, and political risk all rapidly converging as shareholders weigh the next move. We've got the takeaways of the trading day that's coming up next. Stocks rise with the S&P 500 finishing just below a record close as the Fed cuts rates. And Yahoo Finance's Jared Blickery joining us now with the trade day takeaways. Jared.
Thank you, Josh. We got to talk about those small caps because they loved what Paul had to say. So let's get control of the Wi-Fi Interactive here, and I will show you what the Russell 2000 did on a charting basis today. There we go. It was interesting. Right at 2 p.m., we saw a small spike, and here we go. And that was good enough for the record for the Russell 2000 to hit a fresh record intraday high. But it was really what Powell was talking about over the press conference that I think got small caps more excited than anything else, as you can see here. Although they did end a little bit off of the highs, but they beat out their larger cap cousins by a pretty wide margin today. And it's not just small caps; it was also the micro caps. That was another record high for the CRSP US Microcap Index. And by the way, I went through history. This was the first Russell 2000 record high on a Fed day since early November of 2021. So it's been 4 years. And by the way, the Russell 2000 did almost nothing over the last 4 years. So hopefully that's not an omen. Also, just wanted to briefly point out, we got some record country highs. If you follow the ETFs that track various countries, Spain, Switzerland, Poland, Canada, Chile, and the all-country world index excluding the U.S. So it was a good kind of day around the world there.
All right, so some records. Any other notable records you want to highlight, my friend?
You bet. Let's talk about Cisco. And for this, I'm going to go to the Dow. We had some records in the Dow today. Also Goldman Sachs, also Caterpillar, and maybe one or two others. But let's pull up Cisco here. I'm going to show you a really long-term chart. In fact, this is my max chart. This goes back to the 1980s. And look at that. This was the dot-com boom. We only today finished higher than that peak in the year 2000. I think it was March of 2000 then. So this is just a cautionary tale of what can happen when you have a really big stock like Cisco was back in the day, but a bit overhyped. And this actually leads into we have a clip here from a guest. I got to talk with Kai Wu on Stocks in Translation. He's been writing about this recently and about how some of these hyperscaler investments might be a little bit overhyped. And let's take a listen to what he had to say.
Basically we're dealing with this one massive theme, which is the $400 billion that the big four hyperscalers are plowing into AI CapEx, which trickles down all through the economy, whether you're utility or real estate, construction. So there's a lot of sub things happening here with the labor markets, with the Fed obviously today, and with the tariffs. But I think it's all kind of subsumed and all kind of secondary to what is the biggest theme in markets today and over the past few years. Right, the Magnificent Seven stocks have compounded at 27% over the past decade, effectively powering the returns of the entire market.
That episode drops tomorrow morning, so that's going to be Thursday morning early. Check it out. Sparkline Capital is the company he founded and works for and does a lot of incredible research for them.
What about Bitcoin? Any response, reaction to Jay Powell today?
Look at this. Bitcoin whiffs. Can you believe that? So despite this really risk-on reaction that we got from small cap stocks, I'm going to show you what Bitcoin did. And it was a whole lot of nothing. We got a little spike up here, but then we sold off, and we're basically giving all of that back. So Bitcoin has just not responded to a lot of the traditional things that regular stocks have, and so there goes that correlation. I'm going to say it again here. I've been saying it for weeks, if not a couple months, that Bitcoin is behaving very, very technically. So all the selling has been in predictable areas. The shorts remain in control over the short to medium term. Longer term, still kind of up in the air, but 75,000 remains my line in the sand, my friend.
Finally, it's Fed day. I feel like we should check the dollar.
Do we have time for that? I'll do this real quick because the dollar was off today by the most in several months. So I think I don't have a lot of time here, but I'll just show you 0.5% for the dollar, kind of a big deal. This takes pressure off, so that's kind of a good thing here.
All right, thank you, buddy.
You bet.
Appreciate it. More Asking for a Trend coming up next. The Fed has made its last rate decision of the year, making a widely expected rate cut, but markets not out of the woods yet from seeing more volatility before the year end. Explosive options technical analyst Bob Lang joins us now to discuss in the Options Pit, sponsored by Tasty Trade. Bob, it's great to see you. Let's start here, Bob. I'm just curious, how do you position for an event, Bob? You got Fed Day. It's circled on the calendar, right? And listen, there's going to be this event. I think the market's going to make a move. I'm not sure in which direction. How do you use the options market, Bob, to position for that?
Good to see you, Josh. Happy holidays. So what I would like to do when on a Fed day, when I'm a little hesitant as to knowing which direction the market was going to go into, listen, if I'm long the markets, and the market's been in an uptrend as it is, has been since April, I want to buy some puts. I want to buy some out of the money puts just in case, because the insurance, Josh, is really cheap right now with the volatility index sitting around 16 to 17% this morning before the Fed meeting. The market is not expecting too much of a down move. So if we do get a surprise move to the downside, if the markets didn't like what Chair Powell and the committee had to say today, well, you got some protection on. And if you're wrong and the market does go up like it did in the afternoon, then you can just lift all that protection and move that to the sidelines and just continue to start buying up whatever longs you have in the market. But for the most part, I want to reduce my volatility, and the way to do that is to buy some puts. And I always tell a lot of people that, I can get long this market and start buying calls when I have some puts on at the same time. And I know that intuitively doesn't make a whole lot of sense, but I like to have some protection on just in case the market turns south.
All right, Bob, let's go from broad to specific. Let's get to some trades. Walk me through Citi. What are you seeing there?
Well, Citigroup has been one of the better traded banks for the past several weeks. It just hit a new high today. It's at about $111 right now. And it's been performing much better than the bigger names like JP Morgan and Wells Fargo, and even Bank of America, too. So I've chosen Citigroup. It's got better relative strength than those two. It's been getting better money flows. Options flow has been off the charts, have been really, really strong out to February and March, Josh. So I'm looking at this. I'm looking at a bank that's one of the top performers. It's got earnings coming out in January. I'm looking at a call, really straight call on February out to the third week in February, which is the monthly option. The 110 call is selling at about $6.10. Now normally what I might want to do, Josh, is to offset some of that risk and some of that premium by selling an upside call against it, but there's just not a lot of premium in there in the January, say 115 call. So I'm going to go straight with the 110 call. If it gets up to about 115, 114, this option is going to be up about 50%. So I like that risk to reward here.
All right, Bob, here's a strong pivot. From Citi to Victoria's Secret. You say here your favorite name. How come, Bob?
Boy, I looked through that earnings report last Friday, Josh, and it was really impressive. I'll tell you what, the one thing that stood out in my mind here with Victoria's Secret was the CEO came out and she said that they are selling more product at regular price than at discount prices. Now that kind of blew me away. Why? Because the competition there is extremely fierce. You've got names like Skims, which is Kim Kardashian's brand. You've got other names like Estee Lauder's got some lingerie and so forth. And a lot of these companies out there, Josh, are really competing at cutthroat prices. And so if customers are still coming into Victoria's Secret, those stores and pink stores, and buying product at regular price, they've got to have really good merchandise there to be selling that at those ridiculously high prices, and they are expensive. So I'll tell you what, this earnings report was very impressive. The stock just a few years ago, Josh, was split off with from Bath and Body Works, BBWI. They were joined together, and Victoria's Secret is a standalone brand right now, and it's really doing well. It's really killing it on all metrics here. The margins are great, the sales are great, the earnings, they guided higher on the earnings for the rest of 2025, their fiscal year, and into 2026. Just not much not to like about this stock right now.
The Fed, Citi, Victoria's Secret. We covered it all, Bob. Thank you, sir.
Great to see you, Josh. Happy holidays.
You too. Time now for what to watch Thursday, December 11th. We're going to start off on the earnings front. That's some big names reporting on Thursday, including Broadcom, Costco, and Lululemon. Broadcom announcing results for the fourth quarter after the markets close. Analysts expecting Broadcom's quarter to be solid. With AI is driving almost all the growth, investors will be listening to any commentary on the call about the chipmaker's full rack deal at OpenAI and the information reporting recently that Broadcom is in talks to design future custom chips for Microsoft. Taking a look at the labor force as well, we're going to be getting weekly initial jobless claims numbers on Thursday. Economists forecasting claims to tick up compared to the previous week to 220,000, signaling there may be some more cooling in the labor market. And moving over to housing, weekly interest rates from Freddie Mac coming out on Thursday. The current rate on the 30-year fixed is 6.19%. Mortgage rates have declined now for 2 consecutive weeks. That's going to do it for Asking for a Trend. Have a great night.